Hello, today is Wednesday, the 9th of April, 2008. This is Brian Shannon from alphatrends.net, and the market closed. S&P 500 finished with a loss of $1.37, or 1% exactly. And as we know, the market has been flashing some warning signs I've been making you aware of last Friday and then Monday with the late day selling that we had seen on the intraday time frames. And yesterday we started to see the first signs that this market was breaking down with the gap lower and the lower lows and lower highs. Actually, we saw the first signs Monday afternoon as it made the lower low in there, broke through that level, and that's when I said that you basically want to be very defensive on this market, and that you have to go back to a cautious stance. When we have a much larger down move in the markets, a big bear market like we're in on the weekly time frame, these rally attempts are going to be tough to hold on to. Basically, you have to remember again that we're undergoing what may be, in hindsight, we'll find out later down the road, a bottoming process, and that process continues with back and forth action, as this is where we really get to see the battle between the buyers and the sellers take place in here. The good news is there's a lot of stocks going up and there's a lot of stocks going down, and it makes a neutral stock environment, stock market environment overall, makes for a better stock picking environment, in my opinion. And you can trade stocks basically on their own merit, as they're not really influenced by the much larger factors in the overall market. But we still do see some encouraging signs here on the daily time frame. We don't want to ignore that, of course. First, the 50-day moving average is rising. The market came down to the rising 10-day moving average. The 10 is above the 20, and that 20 is about to cross up to the 50 as well. So we're seeing this, indecision basically, as buyers and sellers, battle for control once again. If we look at the average price that this market is traded at since the beginning of the year, we're right down towards that level. So the 135 level will continue to be an important area where we're going to look for potential support in here. As I mentioned, though, on the blog earlier today, that potential support is just an area where you look to shorter-term time frames for evidence that there may be buying occurring. And the first line of defense for the S&P 500 was breached right here, first important level really, at about that 136 level. We saw that level was this prior high back in late March, and then it was defended against right here on this pullback. And finally, we broke below that today, and we also broke this uptrend line. Now, again, that doesn't mean we're going to continue lower. It means that that first line of defense failed to hold, and we've got to take that seriously. If you look at the next potential larger level of support for this market, really it's going to be that 135 135 even. That's where we've seen this market do battle back in much of March at that 135 level, and breaking below that would then lead us to think that maybe the next levels are going to be tested as well, down below 134, or potentially down here. What we can look at now on the 10-minute time frame is we do have this series of lower highs and lower lows. We've got clearly the path of least resistance over the last couple of days is lower, and we're looking at a declining 5-day moving average. I think that this market is going to have to get back above 137 realistically to nullify this downtrend. But again, mixed signals. We've got a short-term downtrend within a neutral, daily time frame, but in overall larger, bear market. So the larger term time frame will really, tend to lead to we'll see a resumption of the short-term trends in the direction of that longer-term trend, until the forces have been worked out enough here where we've had enough time correction as well as price that the buyers can establish a firm bottom and the market can rally from. So all is not lost in this market, because again, 134.80 to 135 is the key level of support for this market in the S&P 500, because it is these prior highs. It's the approximate location of the now rising 50-day moving average, and it's the approximate location where control for the trend, for the trend of the year is being fought with that daily VWAP. So right now, short term, you got to look at it as guilty till proven innocent, and just continue to be cautious with your long side trades. The semiconductors we saw broke down yesterday, and this group, had been one of the better ones as far as relative strength, in that it was going more sideways when the rest of the market was still correcting to the downside, and we saw the buyers getting more aggressive price-wise. Well, the market finally broke above that resistance level at about $30 a share, and that level has since been breached, as we saw yesterday. And I said yesterday that you want to pay attention when the market does that, because a lot of times it spills over to the NASDAQ as well. 29.75, we're basically right there. This is the level I said that would potentially pose a problem for these semiconductors going forward. And we've got a declining 5-day moving average. So the semiconductors look like a mess. I would stay away from those. The Russell 2000, let's take a look here at the daily time frame. Here we've got the market came down and touched on intraday that rising 50-day moving average. And the market is just searching for some support, is what it really looks like in here. We saw that this uptrend also was broken today, and this prior level of resistance, which a lot of times we look for resistance to hold as support, that was broken, and that kind of opened the floodgates short term for the sellers in here. And you can see that that's at $70.50 level. Now that level has the potential to become resistance. That if the sellers of the last few days are going to defend their bearish bets in here, then that level will be important going forward. And we'll need to see this 5-day moving average flatten out and prices to get back above there before I think you can really trust the long side for more than just intraday trades. So we're seeing mixed messages, and we're seeing this. This is just, you can still consider this normal profit taking for this huge rally that we saw here from 64 up to 72. When it comes within the context of this much larger decline and this just below these key levels of potential resistance near 73, you got to expect that it's not going to be able to make it through that level easily, that the sellers are still going to be around, and that's what we're seeing in here. The financials have been doing battle with this downtrend line in the 50-day moving average. 50-day moving average may be starting to flatten out, but the sellers are still around in this area. And we saw in this market as well that this uptrend line has been broken, and more importantly is that 26 to 26.20 level. That level has been very important for this market. Let me put on the 120-minute time frame here. You can see though that this this 26.20 down to $26 level has been an important level of support and resistance for this market. Now that we've got these lower highs, again, we were waiting for hopefully the market to get above some resistance here for a potential move higher. That failed to hold, and the path of least resistance continues to be lower in this market. This uptrend line again has been broken, and now 26.20 is going to be important again. That's the first line of defense where we would expect to see the sellers either reemerge, or if they can get back above there and then make a higher high in here, then perhaps we could look at a more bullish scenario for these financials. But right now, it's just not looking like it. Perhaps we're going to go back down and test this level near 24.5 or so. Market remains in a primary downtrend, guilty till proven innocent. Bounces need to be traded aggressively. The semiconductors were down 1.1% today. They closed at 44.90. That's pretty much an important area. We've been looking at the 45 area. So it broke 45 intraday, but just below 45, of course, is this these highs back from mid-February at 44.50, and below that is the much more important level of support potentially here at 43.50. The 50-day moving average is down near about $44 a share. It's rising. The 10 and 20-day moving average are above that. So odds would favor on the daily time frame that we're going to see some kind of stabilization that we can potentially trade to the upside here over the next few sessions. But when you look at this 10-minute time frame, none of that evidence is here yet. So wait for the price to tell you that the buyers have shown up. Right now, there was zero evidence of that. We've got these lower highs and lower lows. Very short term, getting back above 45 will be a positive. But that's not going to turn this trend. We need to see this 5-day moving average flatten out and then begin to head higher before we can really trust the upside once again. So we've got potential levels of important support below this market, but as we saw today, these potential levels of support don't always hold, which is why you always have to look at support and resistance and add that word potential in front of it until it's been tested and actually holds.